Good afternoon, everyone. It's 2 o'clock, so we'll get into it. My name is Vinny Boyman, and I'm a commercial partner at the Bank of New Zealand. And today's webinar is an opportunity to highlight the available options to assist businesses through COVID-19. So hopefully you've got a copy of the presentation at hand, and you'll note throughout there's some particular references to how we would view things at the BNZ. However, I'm sure this is a pretty generic approach taken by most banks when looking at ways to support their clients. There's quite a lot of detail, so I will cover off the main points that are relevant, particularly around the Business Finance Guarantee Scheme and the Small Business Cash Flow Scheme, which was announced late last week. So let's go on to the next slide there. So in terms of the funding options that are available, there's some pretty easy levers that banks can pull. This is aside from the Business Finance Guarantee Scheme and the Small Business Cash Flow Scheme, which is a separate note we can talk about a bit later. But a lot of the early conversations we've had with businesses is around immediate preservation of cash flow. And typically this can be achieved through either interest only or reduced principal and interest repayments on their term debt. And you'll note at the start of the slide there, it talks around the home loan options. We saw a real shift of business debt being moved against residential assets over the last 12, 18 months. And obviously this was driven largely by attractive interest rates and extended terms. So for a lot of businesses, reducing payments or interest only on their personal debt or against residential assets is a good option. Secondly, in terms of business funding itself, we have looked at a lot of interest only on existing term debt. Again, this buys business owners time in terms of preserving that cash flow, given we didn't really know when we entered into lockdown how long we'd be operating at level 4. And having available cash reserves to fund working capital as we come into level 3 and potentially level 2 next week. Sorry, just go back, my slide's not working there. Yeah, hopefully that's better. So the key thing here is early engagement of conversation with your professionals, and we've seen a lot of requests recently of interest only for 90 days, and that's sort of an initial band-aid to buy time. I'm thinking that we'll probably get another wave of requests for working capital purposes as people return to work with temporary overdrafts put in place for a similar amount of time. And again, these are very good options for your business, and for most banks, fairly easy levers to pull for existing clients. It doesn't require too much information and rigmarole in terms of putting that in place, hence why we call it a band-aid. You'll see down the bottom of that slide in the green application for Small Business Cash Flow Scheme. As I mentioned earlier, this is a recent scheme announced by the Finance Minister late last week, so I'll cover that off in detail later on. The next few slides are largely around the BFGS, or the Business Finance Guarantee Scheme, and just sort of uncovering what that looks like and what potentially is required from banks in terms of looking at funding. Let's go on to the next slide. So these are the headlines here for the Business Finance Guarantee Scheme, and you'll see there that there's a couple of comments there in italics, and again there's some slight tweaks to this late last week, and I think the reason being is that the access to this funding through the respective banks was more difficult than probably the government initially thought. So you see there available businesses with revenue from 0 to 80 mil. Previously, this was a 250K minimum. That was removed late last week. 500K maximum amount being able to be borrowed over a 3-year term, and interest rates ranging from 2.75% to about 4.5%. So the key thing here is that the loans are available to support operating expenses and not CapEx. And again, it's probably more appropriate for some of those businesses that are going to have a longer period of working capital requirement without any income, so the likes of tourism or potentially accommodation, whereas most businesses that are returning to some form of trading at level 3 or even level 2 might require or get away with a shorter term working capital facility, as in a temporary overdraft or even interest only on existing debt. So the key there in red, it can't be used to fund dividends, which seems fairly obvious, and also can't be used to refinance existing debt, given that it is potentially a cheaper interest rate than a lot of the commercial lending that's out there. It can be used to refinance short-term debt. So as I mentioned earlier, putting in place a working capital facility to provide working capital support. If those facilities don't clear within 60, 90 days, then it might be appropriate to restructure that debt onto a BFGS loan. Further down the slide, GSA was mandatory. Again, this was removed late last week, and obviously shareholder guarantees are also required in most circumstances. There was an exclusion for dairy farming, grain, sheep and beef farming, but this has now been included in the scheme. Let's go on to the next page. So in practice, yeah, the loan, I guess there was a bit of a myth that the loan was a gift and that it didn't need to be repaid, and because the government was guaranteeing the loan, it was going to be an easy facility to obtain. So essentially how it works is that banks would still require normal securities or collateral that they would for any business lending. So a general security agreement, landed security, commercial or residential property if available, and or shareholder guarantees. In a worst case scenario, if the business went into liquidation, then the bank would obviously call on the securities that are in place. And if there were any shortfalls after the securities were called on, then the government guarantee covers 80% of that shortfall. So you could probably look at it more that it's there to protect the banks as opposed to the businesses. The other parts of the scheme is that it needs to be drawn down before the 30th of September, and it can be partially redrawn as required. Also, the key part for me is around the structure. So interest only for 6 to 12 months with an amortization or repayment term for 2.5 years. So that's a key part, because what it looks like is that, let's say for example, you had a 3-year loan of 250,000 and your 3% interest rate, interest only for 12 months, your interest only costs monthly would be $625 and per annum about 7.5 grand. Now to repay that loan over the remaining 2-year period, so a 3-year term in total, the monthly principal and interest thereafter is about 10.5 grand or 128,000 per annum, which is a significant increase in expenditure, and obviously that needs to be factored into any sort of cash flow forecast. Whereas if you look at a more business as usual request, commercial lending typically has a term of 5 to 15 years, which is done obviously to have less pressure on business cash flow. You see there towards the bottom of the page that a business plan must be completed, and I'll go over that in more detail shortly. It's one of those things that seems like it's a lot involved, but I think for any financier, we need to be really clear that the business is viable going forwards, and that thought has been put into all the variables that can impact their business, good, bad, or otherwise, and it's about having all that information articulated on paper. So essentially the business finance guarantee scheme is there to help businesses that have been negatively impacted by COVID-19. Obviously, if you're deemed to be an essential service and have been trading through, i.e. supermarkets, then it wouldn't be appropriate for a BFGS loan to be put in place. We want to get a clear understanding about the time that's going to take to get back to break even or business as usual, and that's why when we look at the servicing for a BFGS loan, it's around historical profit, so earnings before interest and tax. However, we still want to be really clear what that future cash flow looks like, and probably more likely to look at a 3 to 6 month view, because it's pretty hard to guesstimate what 12 months will look like for any industry, because no one knows given the uncertainty that's there. Some key points there in the smaller print towards the bottom of the slide. It's worthwhile in being able to demonstrate the core market for the product and service, that your customers are still in business, which I guess is really important when it comes to collecting debtors down the track, because obviously you're relying on payment of those invoices to fund your working capital and fund creditors. Also that you're clear on what your competitors are doing, and if your supply chain is still in order, if there's going to be delays in terms of accessing product and raw material. And also really important that you have good advisors around you, for example, Paulson Higgs, which, from our point of view, we look at the governance of the business, because in times like this, it's really important that there is clear direction and there's a sounding board around the business owners in terms of making those decisions. And the final point is that the business finance guarantee scheme loan needs to be repaid in 3 years, which we've touched on a bit earlier. So the next slide. So this is around the business plan. Again, most people have probably put a lot of thought into the impact that COVID-19 has had on their business, but I guess from a finance point of view, we want to be really clear of what that looks like. And there's a couple of, hopefully it was sent through as part of the presentation pack, a template that we send out to our clients. And again, there's probably many variations available, but it's just a starting point for business owners to put their ideas down. And I guess really focusing on the next 3 to 6 months in terms of the impact and how the business is going to return to business as usual. But I guess, I suggest in the first instance that having discussions with your accountant around what that business plan is, and or tying in conversation around that cash flow forecast. Also included in the business template is a cash flow tool. Again, very basic and more of a starting point. It's probably a more worthwhile exercise engaging your accounting professional to work through what that looks like in terms of returning to business as usual and what break even is. And again, sometimes it can be fairly hard to guess what the impact is, but if you look at last financial year and you reduce sales by 30%, what does that look like in terms of the impact on the bottom line, and what costs can be reduced to make sure that you're still breaking even as a minimum? So that's about all for the business finance scheme. So I guess last week, Friday, the finance minister came out and announced a new scheme that was available for businesses, and a lot of it probably ties into the fact that there wasn't a lot of traction with the business finance guarantee scheme, and it was probably a lot harder than people initially thought in terms of sourcing those funds. And like I said earlier, like sourcing interest only on your term loans or additional working capital through an overdraft facility, fairly easy levers for the bank to pull. But when the government's involved and there's a process in terms of the regulation and information we have to provide back to them, there's a bit more hoops to jump through in terms of putting that funding in place. And that's where the SBCS, or the Small Business Cash Flow Scheme, came about. And I guess it's not quite the helicopter money that some of us are probably hanging out for, but it's pretty close in the fact that it is interest only for the first 12 months. And it's in place for small businesses, so including small sole traders, and funding available up to 100,000. So to be eligible, all you need to be is a small or medium-sized business that has been adversely impacted by COVID-19. So again, the details yet to be determined, but I'm guessing there'll be some sort of evidence required to show that, probably similar to the wage subsidy scheme. If you have less than 50 full-time employees, then the scheme might be appropriate. So essentially, if you're an eligible business, you can obtain $10,000 up front and then a further $1,800 per equivalent full-time employee. So if you had 10 staff, you could potentially loan $28,000, which would be interest-free for the first year, as long as it's repaid within that time frame. And then thereafter, there's an interest rate of 3% that applies if it's not repaid within that first year, and then interest only for up to 2 years, maximum loan term of 5 years. Again, this is probably a more attractive scheme than the business finance guarantee scheme, largely because you're taking out the bank in terms of that equation, but in saying that, it's still pretty important that even if you're looking at this scheme as an option and you have completed cash flow forecasts or a business plan with your accountant, that you engage your respective banker and get their sort of feedback and opinion on that. I've just got a question that's popped through there. Can I see it? I can't see it. So I'll just carry on for now. So again, the detail is going to be further disclosed this week, and I'm guessing that applications opens on the 12th, so we'll probably see something in the next day or so, and it will be similar vein to the wage subsidy scheme, directly through my IR or through IID online. So if we go on to the next slide. So I've sort of touched on it earlier on in the slideshow, is that it's really important, and I'm assuming most business owners have already, but seeking that independent professional advice, talking to your accountant and banker as soon as possible, and making sure that all ideas and actions are collated on paper. And that's probably the key there, that I know that a lot of thought has probably gone into businesses during lockdown, as business owners had the luxury of having the time to work on their business as opposed to in their business. But again, it's about articulating that in a format that is readily presentable to the bank, and making it easier on your respective bank in terms of going through that credit process to put funding in place. There's a couple of points there, and a lot of them are probably fairly common sense and likely have actioned already, especially going into lockdown. Wage subsidy, across most people that I've spoken to, this has been applied for where appropriate. Again, if you're leasing a commercial building, then you're speaking to the respective landlord around a rent reduction or rent holiday. Right, just got that question come through now. So the question is, if I take a business finance guarantee scheme loan for 3 years, then refinance it for a longer term after 1 year, so I get 1 year's interest free. So I think that's the small business cash flow scheme loan. So I guess, you know, the information will be broadcast this week, I'm assuming, but I'd say what will likely happen, and this is me sort of just forming my overview on it, is that a lot of people probably apply for the small business cash flow scheme loan and enjoy the interest-free period for 12 months, and then look to potentially refinance that onto another product. Whether that's allowed or not, again, that detail is going to be determined later on this week. But in my mind, that would potentially be how people view it. But yeah, I would say that if the government has provided funding, that, you know, there'll be terms and conditions around that sort of 12 months interest-free period, and whether or not you're obligated to be repaying the remainder of that loan through the existing channel, so obviously through IID Direct, or if there's option to raise funding through your own bank and repay it as a lump sum. Again, hard to say at this stage. Hopefully we find that information out later this week. Hopefully that's answered that point. Going back to the final slide there, so obviously talking to IRD about, or even the accountant around deferring tax, and there's been some recent release around the options there. So again, engaging your accountant to determine what is available. And what we're probably seeing a lot now, and I know a lot of retailers are taking this approach, is you'll see discounting of product and stock, and obviously this is to increase turnover of stock and generate cash. And whether that's, even though it might be at a reduced margin, it's still cash that can be used for working capital. So again, if you're providing prompt payment discount to some of your customers, just so that you can get payment of those debtors faster, obviously that's money in your bank as opposed to them using your funds to source their working capital. Yeah, and the real risk is over trading post level 4, even level 3. I think the real pain potentially might be seen towards the end of this month and early June, where businesses have returned to some form of trading and realise that the cash reserves that they had built up in April start to whittle down, and once the wage subsidy runs out or is repaid, then that's when the real pressure will come on. And that's why it's so important that that break-even analysis is completed in terms of cash flow forecasting and modelling, so that you're fully across what that break-even point looks like and what avenues you have in terms of reducing costs, that the business stays break-even at best as we sort of work our way through COVID-19 and hopefully back towards some form of business as usual. Just seeing if there's any more questions come through there. So that's probably about it from me, unless there's any final questions coming through. Again, there's a bit of information in the PowerPoints that have been provided, and I'm happy to take any questions offline as well. And I think it's really important time to work closely with accountants and client and bankers alike to make sure you're all on the same page and working towards a viable business and business as usual whenever that might be. Fingers crossed we hit level 2 next week. So yeah, that's it from me, and hopefully that was of some value, and all the best navigating through this COVID-19 landscape. Thank you.